Hello, everyone. Good morning, good afternoon, and good evening. So from the past few days, that I didn't stream, and I secretly entered a lot of positions again. I'm back on margin again, and one of the major idea that I wanna really looking forward to is Tesla. So Tesla has been building a huge base since late 2021. It's like a gigantic VCP. Looks like it's now build the 1, 2, 3, 4, maybe the fourth higher low of this gigantic base. And the daily chart is now above all the EMAs except the 150. But the 921 and 50 are really close to each other. Like this, I really like buying stocks that the EMAs are really tightened up. And yesterday's that could be a pullback buy, but I didn't trade it. I missed it. Anyways, Tesla is I think a top idea that I would focus on. And Cypher is gapping up by around 4%, but it's above the previous highs, the previous day highs, above the Friday's high after the earnings. And it's also it's still inside a long base from November last year. Weekly chart looks really nice above the 9 EMA. And this digital ocean is capping into the all-time highs again, almost. The momentum of this stock is really strong, and it is getting increasingly strong since this pullback into a 50 EMA. I think since the early April, actually. And this gap up is gapping into the 2021 highs. The good old days. It spent more than 4 years to recover from this drawdown. Yeah, we'll talk about the entries. We'll talk about the entries later later today. Um, yeah, APLD. Really love yesterday's shakeout. I keep watching this thing, but I cannot manage to get an entry. It's also a long base. I think kind of similar to Cypher, but this thing's that technically is a bit stronger. It's in the upper part of the base, and but it is already breaking out. I think maybe yesterday is the best day for entry. It knocked the previous pullback into the 21 EMA. And also lots of the software names are getting some strength. So IGV has been breaking out since the first day low, and yeah, Thursday. And so I will consider buying. I think Nets or CrowdStrike. They have been on my watch list all the time, but I didn't pull the trigger because on Friday and yeah, on Friday I think I bought a lot of other names like I think the quantum names and Nebius. So I bought a lot of the other names, and that's and I just don't want to take too much risk, and I cannot get the best entry because I can't watch that 10 stocks at a time. But I really like the rotation, like the strength on the software names. So we're seeing more and more stocks participating in this rally. That's really great. I'm I don't know how this rally would end, but not sure. But I just have a feeling that could be a really powerful rally, probably a lockout rally, and without much of a consolidation or pullback, because a lot of the names are actually just breaking out of the base or just starting their stage 2, especially the software names. I think maybe back in 1999, that is a 100% move in Nasdaq in just 1 to 4 months, and Nasdaq doubled in 4 months. And after that, it kind of drifted sideways and then make another 100% move in another maybe 6 months. Not sure how we will end, but maybe we need some imagination this time. And the leaders are not slowing down too. Like the MU is really strong. Now it is starting to get a bit starting to accelerate, speed up a little bit. I'm gonna skip the first 15 minutes. I don't know, maybe Cypher. Hopefully we would get a pullback in the first 15 or 30 minutes. Tesla is breaking out on the weekly, not only on a daily, but on the weekly too. Hopefully, hopefully we could get a pullback. Actually, Rocket Lab is also looking pretty decent, and actually, like today could be a buy, but earnings is coming 2 days, uh, or 3 days later, so just gonna not gonna trade this one. the DOCN is getting a lot of follow through after the open. Cypher is also looking to lift off. Just a touch at the 50 EMA. Not sure about Tesla today. I think I'll prefer a pullback to the 9 EMA instead of buying the breakout at the 150. Would be better to wait for the 9 and the 21 to be above the 50. Maybe after it faced some resistance at the end of VWAP or the 150 EMA. Not feeling confident at buying today. Cypher is up 8%. It's going straight up. Oh. The DOCN is super strong and it has the potential to be the next market leader. Looks like it's just clearly the previous highs and breaking out into the all-time highs with uh with huge follow through. And for Cypher, would love to see a pullback into the like previous highs, or at least the 5-minute non-EMA of 1840-ish. Hopefully, looks like the patience are paying off. I would probably gonna trade the breakout. If I were if I were trading 2 years ago, I would just FOMO and just click the buy button. So Tesla, any pullback into the 9 EMA would be really great, especially when it coincides with the 50 EMA. The best scenario would be like to build a to end this week candle tight. So like to build a tight weekly candle and even the maybe a pullback into the 21 EMA. So it could line up with the 9 EMA on the weekly, like probably like around these levels. If the market's gonna show some weakness in the coming days, but this is the plan. That plans is plan. If Tesla uh, gets a gap up in the coming days above the NQF web or above this 410 previous high, there could be a like an EP. Like I would treat it as an EP and just buy the gap up. No, Cypher is breaking out from the pullback. That is. Yeah, this 1 minute breakout I think, yeah, could be traded. Maybe I talked too much. Maybe I should focus more on the charts. But that's that. It looks like a really good, really great looking breakout at the moment. The thing is that it's time to uh talk about the entries. I bought MSTR on last Thursday. So I always like I track this MSTR for like from the lows here. I think the crypto can make a move and like started to form higher lows and could at least have some bounce maybe to the 50 weekly EMA. And so what captures my attention on Thursday on the weekly chart on especially on Bitcoin. So this week closed above the 9 EMA on the weekly charts, which is a really bullish signal. And on Thursday, it actually pulls back to the 9 EMA. I think on Wednesday, like the first day is still really close to the 9 EMA, and Thursday, I think it could be worth. I think the risk reward is really great here. Either it holds the 9 EMA and continues the uptrend, or it just loses the 9 EMA and could possibly just fade and start a downtrend. So I bought and after the first 60-minute candle, MSTR close above the 9 EMA on the 60-minute chart. I think it could be the start of a new uptrend, like at least the end of this pullback on an uptrend on it in the daily time frame. So it's actually a breakout. I would consider it as a breakout uh, after a pullback. I think I bought it on this 15-minute breakout or a 5-minute breakout. Maybe on a 5-minute breakout. I'm not sure this is correct, but yeah, either it's like similar. Yeah, either the 15-minute or the 5-minute breakout. In Marvel, I, I bought this again also on Thursday. And I put it on like I think it's also the 5-minute or the 15-minute breakouts. After the uh, gap up and there's the first fade in the fade in the first 15 minutes I didn't get it, and there's another pullback intraday, and then I think it could be yeah. I also treat this as a breakout for this tight two candle range. It's a little bit aggressive, but I believe on Thursday the queues are also are finding support and breaking out intraday. And I use this as a like it like using the index as in support. Like if the index is breaking out, probably you will get a high chance of a successful breakout in individual stocks too. And Marvel is one of the leading stocks. And AEXR is also bought on Thursday. It almost stopped me out yesterday, but I hold onto it. I think the same candle with the Qs breaking out, and also I think the same candle with Marvel. And this is also, I think the level is similar to the previous candle, high. So it is also a breakout from the previous candle high. And I really like the increase in volume since the uptrend. So AUI, this one looks I think the best among the top like among the previous three. It is also bought in on Thursday, and on a daily chart, it's like the anchor VWAP and the 9 EMA pullback. I think I bought this one on the 5-minute chart for 5-minute candle. Yeah, probably after this 5-minute candle, and then I bought it after the close. So AUI always on my watch list, and a really great liquid stock and a momentum name. 12% ADR. One of the best stocks right now. Tesla breaking out. Well, the OCN is up almost 40%. I think I'm not gonna trade. I'm not gonna trade Tesla today, and hopefully uh, it will pull back and not gonna go straight up like maybe what the OCN did. They look so good on the intraday charts. Uh, no, I'm just not gonna trade it. So Nappies are. I think this is also another really great looking breakout. I would consider it as a breakout. So the first one is the anchor VWAP from the swing low, and also the previous high from this long base, and also this high here. So I keep watching whether like can Nebius hold this support level, and on Friday, so Thursday my longs are working pretty well, getting some follow through. So on Friday I get some traction and I have more confidence on the upside. And then I just bought the I think the 1 minute breakouts. Yeah, 1 minute breakouts. I didn't wait for the opening range highs to be to maybe I bought the opening range highs. I think I bought the opening range highs. And it's also the breakouts from the 60 minute 9 EMA from a pullback. And it is a gap up above the 60 minute 9 EMA. So I really like that. I prefer a gap up above it and maybe a slight pullback or undercut the 60 minute 9 EMA. And the 9 is also coincides with the 21 as well. That makes it even better. And quantum names, I missed it on the first day breakouts because it's going too fast. I think it's just breaking out on the opening range highs and then it keeps going all the way. Then I failed to catch it. And on Friday, I think like the weekly of the quantum names could it could be a really good spot to maybe at the start of an weekly uptrend. So it's undercuts the 9 EMA and then close really strong. But on Thursday it's definitely it's not a close, but it's back above the, all the EMAs. So on Friday I keep watching them and I just bought the pullback intraday. I just buy every dip. So I think that these two entries are similar, and IONQ is actually also a pullback into the anchor VWAP from the swing high of this small base, a shorter base. Also the 9 EMA. So this is the more classic pullback entry. And now they are pulling back. Hopefully they can hold above the 9 EMA. Yeah, IONQ's weekly looks stronger, but QBTS is stronger on the dailies. on Wednesday and Thursday. That's why I also bought QBTS too. In the therm, I just bought the breakouts, like it is the breakout of the previous day high, and Oliver Calconis wick play when it opens at the upper wick of the previous day, of the previous day, and then just bought the breakout when it take out the previous day high. And the firm is one of the strongest, probably I think maybe the software names or but at least it is a 5% ADR stock, not that slow. And I love the undercut and rally on the 9 EMA on Wednesday and Thursday. Entry at 5-minute breakout. No coin, it just stops me out. Looks like it's not ready yet. Earnings in 3 days. So circle, I bought the opening range breakout, I believe. Oh, I think I bought it at this pullback, maybe at the anchor VWAP, like the VWAP intraday. And I really like the daily when it gaps up above the anchor VWAP from the swing high. This AMCA is breaking out. It's having some good follow through. And I think they also missed. Wow, MU is going up 10% today. Fastly is up 15. Yeah, Fastly is the one that I think I missed on this breakout. Like this is the I got faked out. I guess this fake breakout. I think on maybe on Tuesday or Wednesday, maybe even on Thursday. But the real one is Friday, and then I didn't take it. Intel skip it. Oh, I got stopped out on Intel on Tuesday, and then it just up 30% since. So a great lesson is didn't wait for the pullback on semi CTF into the 9 EMA. Should have waited a little bit. Should be a little bit more patient. I think a great lesson learned. So we are seeing some volume pouring in. MU SNTK2. Intel's going like 90 degrees up. So I believe the really important thing is how the other stocks react when the leaders starts pulling back. I think in the coming days or weeks, they must gonna take a rest at least if it is not the a parabolic top. But the really important thing is whether the other stocks are going to tank with them, along with them. So if the other names like cybersecurity or the other software names, maybe the data center names or the quantum names, nuclear names, etc. Can those stocks hold up when the leader starts to pull back? I think that will be really important. MP, yeah, oh, nice pullback into the 9 EM and nice reaction off the lows. Earnings in 3 days, but I think it's manageable. And generally, MP, like, there won't be a huge gap up or gap down after earnings, so probably the gap up, the gap down risk is not that high for the name. How do I use the anchor viewer? Um, um, generally the really I would the really main anchor that I would like to use is the high of the base. So I mean the whole base. So take MP as an example. I'm not using any anchor view up here, but if I'm going to anchor it, definitely the first one that I'm going to use is this high. Like that, this is the high of this huge base, and also the swing high of this move. Actually, the all-time highs. So this must be the first one, the main one, or the first one that I'm going to use. And but for this particular case, I think it is not working that well because there are a lot of like chops around here, and also here it's not like obeying or respecting this angle view that well. So, but at least I can get a sense of whether MPS is staying above or below this angle view, or like how much above or how much below it. And then the second one would be the swing high of the recent base. So this is the long base, the larger one, and then the small one. So I would just consider the recent uptrend and the recent base and the recent swing high of the base, which is this candle. Or maybe I'm just going to use at the on the first red candle. I think it really uh just just use whatever you like, or use which one suits the stock the best. I think I'm gonna use it on this red candle, and you can see the on the price is respecting the anchor free web within this space. So there is 1 and 2, like I think a significant reaction on this anchor free web. And on the daily charts, Friday there's the pullback into the 9 EMA and also the anchor free web. This could be a really good entry point too. So generally, I would gonna use like the anchor free web from the large base, the larger one, and also the swing highs, and also the swing highs of a smaller base, like the more recent one. So I think that's what I also use on Scyther. I also anchor it at the recent swing high, but I also actually anchor it on this huge base, like the longer base swing high too. Probably gonna enter it on this red candle, and you can see the price is above it, and I think this is really bullish. So a bullish sign, and price found support. So when the price starting to break above the anchor free web of the smaller base, the more recent one, that it is like a 2FA, like a two-factor authentication. So you need to pass the first one, and then you need to pass the second one, and it actually confirms it that the stock is actually gaining strength. So as in the third, like the more common scenario that I would use is anchored at the recent swing lows. So let's take Cypher as an example. If I'm going to, so apart from the swing high and the swing highs here, probably I'm going to anchor it at the swing low, like on this candle, the more recent uptrend, and it's all actually the low of this long base too. And yeah, and actually, like if you put them together, like here, the price found support right at these two anchor free web. And I think I'm also like exploring to buying on this type of pullback into two anchor free webs. But Yeah, I think you can do your own research and see whether it is a really good entry point. Yeah, so sometimes you can like the new entry tactics is just like to see why the price could find support here, why it's not going to find support um um right at the 21, like after it undercuts the 21 and it found support right at this two angle free weapons. And also the previous, like you can say the previous swing high here too. So maybe these three adding up is like getting multiple layered of support. So I think these are the main three places to anchor. And actually, I think they could be used on intraday chart too, like intraday swing high, swing lows, etc. Cipher could have shorted that. You mean shorted at like on this candle on Friday? Mm, yeah, I think, but uh, or this 24th, I mean 25th, I mean this one, right? Yeah, I think it is. Yeah, I think it's a good entry. The main reason is the EMAs are trending lower, like it is building higher lower highs all the time, and the market is weak. Although it's a cipher, you can say is showing some relative strength over this the market the indices drawdown, but gap up uh into the highs and under the anchor VWAP is a really good, actually a really good short entry. Another example I can uh, recall is this open, like back in January, also the anchor VWAP and the gap up above the EMAs, but the EMAs are like trending lower. Like this is the really perfect rejection at the anchor VWAP. Don't you buy breakouts anymore? A firm is a breakout. This is the more typical, like ordinary breakout entry. And Napiers is also a breakout, but I bought it kind of within the range. I've showed it earlier in case you missed it. But it is also a breakout. I would treat it as a breakout, although it is near the support levels. And I think this type of entries, a gap up and then pull back into the 9 and the anchor VWAP is like a mixed between a breakout and pullback. But yeah, I think I would consider it as a pullback, but it's actually also it's also a breakout at the same day. AGXR is also a breakout, I think. Although it's also like pullback intraday. So we're really seeing some volume coming in. MU and SNDK. But it's not. It's definitely not shortable at the moment, and not sure whether I would short them, but it's definitely not a good time to buy when the leaders are starting to accelerate after. But like MU is just it's actually pulls back into the weekly 21. Yeah, maybe only the start of a new uptrend. SNTK is just so much stronger. Hopefully they can slow down a little bit. It's really sad that I didn't catch SNTK on the Wednesday on this candle. Pulls back into the 9 EMA. Yeah, MU this breakout. Also missed this one. I think I I just didn't trade it. I watched. I keep looking at at the breakouts. Keep scrolling the charts and but never click the buy button. And then it's up 40% since 30 hour, maybe a 30-hour trade. So it really shows you can miss a lot of opportunities, and you will miss a lot of opportunities, and you can still uh make a good return when you're in a favorable environment. So if you keep looking at, like, if you miss MU and you keep looking at it, and like just kind of walk away with it, uh, walk away from the from the missing out, then you're probably gonna miss the other opportunities too. How much profit cushions I have? Will I hold the stocks for earnings? Mm, so the first one is look at the like the previous reaction on on the earnings day for that particular stocks. So some stock generally won't have much reaction, like MicroStrategy. So you need to like kind of analyze the gap down risk before of that particular stock. Maybe, yeah, I think MSTR doesn't have a really high gap down risk. So, just probably gonna. I don't have a strict set of rule, but maybe 5%. Like if it's above my stop by 5%, then it's I would just gonna hold it into the earnings. And then another one, definitely the market cap of the stock. So for example, AEXL, this is only a 3 billion market cap stock. Uh, so generally, smaller cap stocks has a higher risk of gap down. So maybe I'm gonna use maybe a 10% um cushions for me to like hold the whole position into earnings. Maybe I'm just going to sell some before the earnings day. So yeah, so no straight, really no straight set of rules, but depends. Do I consider coming earnings? No, I only trade shares. How do I determine when to trim down positions? I rarely trim a position now, especially like during the earliest stage of a of an uptrend. Either maybe I will sell maybe 15 to 20% into strength, but I don't have a set of rules. I just sell 15 to 20% whenever I want to sell. No rules. But I definitely want the stock to be kinda extended, but I don't have any rule on the extension. Like, do it need to be like 3 ADR above the 9 EMA, or maybe 2.5 ADR um, above the 60-minute 50 EMA? No, I don't have such rules, and I think it really like it always depends on you. Like, it really varies among different traders. Like, some traders will love to sell more into strength, and yeah, there are definitely advantages and disadvantages for each for different um selling strategies. So maybe some wants to like really hold the positions for weeks and months, then they can sell more into strength, like to hold a smaller positions, so they can like get better to manage the drawdown and try to hold the position for a longer for a longer for a longer time in an uptrend, like to capture the highest potential move. But some would like to sell more into strength. Maybe they have a higher turnover rate, so they can free up some capital to finance the new trades. So the same selling into strength approach, but you could get a lot of different reasons, and I don't think like I don't and I don't think anyone has an exact has a good answer for that one. Like a definite answer for selling into strength versus selling to weakness, and or how to sell into strength or sell into weakness. But maybe or in the later stage of an uptrend, like maybe on September last year. So after the market has been going up for several months. So during this kind of period, then I would be selling more aggressively into strength. So let's say maybe if I'm trading micro strategy back in those period, then probably I can close my entire position when it hits the 150 EMA. I'm not doing that because I believe we are at the early stage of this uptrend, and actually Bitcoin too, like, could be the early stage of an uptrend. Then I am more willing to hold the position for a little bit longer until like things changed. Like there are a lot of gap downs or failed breakouts. Yeah, I already bought the new market wizard book. I ordered the I ordered the paper copy for that, and I will receive it on late June, I believe. I saw a lot of people talking about Christian stories because I think he shared he has lost 60 million in 2022. Not sure whether the number is correct, but it is definitely a huge drawdown, and a lot of people are talking about it on Twitter. Although I have I'm not spending a huge time in scrolling the feeds, like the I'm not a Twitter enjoyer, but a lot of the tweets are talking about the Christian story. Oh, maybe, yeah, maybe including the text. But still, it would be a at least a 30% drawdown. And I think that's a really great story and really great sharing. It always reminds us to respect the market, especially when the markets are doing really well, like now. Like when, although it's only the first few, I think the fourth weeks coming into the low, maybe how much, how long is that? Just a month, I think it's the fifth. Yeah, only 24 trading days since the low, and I believe we will definitely reach the point of euphoria when you you're making a lot of money and that your equity curve goes to all-time high, maybe even getting a parabolic equity curve. And that's the that's the danger lying beneath the surface. What was my motivation? Joining again the USIC for the third year. Um, trying to like my original goal is to participate for consecutive 5 years. Like to prove uh I'm I'm not a only a like got lucky in one good year. Like sometimes in a really good year you can easily make a lot of money when you make a lot of mistakes. So I think a 5 year is a is long enough to prove my profitability is not purely from luck. So and I think yeah, and also hopefully I can get maybe triple digit for 5 consecutive year. That's my that's my kind of like a goal. But, but other like there are also other reasons. I think like joining the competitions can like kind of hold myself accountable. Like I need to be really serious and careful for my trading decisions because when I'm losing I have to report the loss to the public, and I think it really helps in uh in my risk management or like to control my drawdown. Do I want to start a job as a portfolio manager or your own fund one day? Um, my answer would be no for now, but I'm not sure. I think I'm not gonna do it. Yeah, I really enjoy the freedom that I'm having now, the time and definitely the financial freedom. Did I watch the to the Jones interview? Not yet. Uh, gonna watch it. Gonna watch it. What's my goal after I hit a 5 consecutive year of triple digits? Um, Actually, it's not my goal. It's like uh, it's like a challenge, like I wanted to achieve, but it's definitely not the destination or the ending point. And I don't have any like goals because I think I am enjoying the journey. I'm enjoying the process. I and I really think you should be focused more on your process instead of the results or the end point. I'm just going to. I believe I hopefully I can keep trading until I lose the passion on it and tries to handle every trade as best as possible. What you think is the biggest factor that make you from a break-even trader to a triple-digit profit trader within 3 years? Um, that's a lot. That's a lot. Uh, I believe above all reasons, the and I think in trading the number one things that you need to that you need to do well is risk management. Or no matter what types of trader you are, you're trading breakouts or pullback or mean reversions or uh on signals, on indicators, or what assets, what tickers you trade. You're trading commodity, forex, or stocks or cryptos. You are trading. you're a day trader or a position trader, I think you need to have a really good risk management. You have to, and even you if you are still struggling, like keeping your losses small, and like controlling your drawdown can at least help you to stay longer in the market. So that means you have more time to learn to improve. So let's say you need maybe 4 years to become profitable, and because your poor risk management, you went uh, bankrupt, or you blow your account in the first 2 years, and then you just cannot continue your journey. So risk management, I think, is the really holy grail of trading. And second one, maybe learning from your mistakes. Like I always emphasize that, just need to review your own trades, the winning ones and the losing ones. Like for the winning ones, like maybe especially maybe the big winners, like what have you done well, either your entry or exits, or just like maybe the stock picking. And for the losers, that you need that just like whether you are entering at the wrong time or exiting too early, like your stop settings. Like for example, like I think a really good, like how do I um consider an entry or exit is good or not, is are the stocks going into your direction after your entry, or go against your direction after your exit. Like, because trading is kind of different from investing, is because um it's the timing. Like you really want to time your entry and exit really well in trading. So let's say you bought the cues on this candle, okay, and then you exited it break even on this candle. So it is a break even trade, but what can you do better from this trade is you can see the market keeps going higher after this candle. So maybe you can start um to like kind of evaluate whether your stop placement is correct or is optimal, or are you following your stops. So let's say if you are using the first close below the 9 EMA, so this is a fairly close below it, and um so in this case it doesn't work really well. Then maybe you can start to explore whether should I use the 21 or just use maybe the 11 EMA. Is this work if this is working better? So, and the entry, so somehow you're entering on in this candle, but actually if you keep looking back, that the trend starts way before your entry, and it's kind of ends like 2 days or 3 days after your entry. So that's not a really good entry, and it means you need to find a better one. So after analyzing maybe tens, 100s of your past trade, and you can gradually find some um like uh common room for improvements for both entry and exits, or like stock picking, um position sizing, stop settings, etc. I think uh yeah, analyze your own trades and improve on your own mistakes. And the third one is, I also talk about it for several times, is don't blindly copy other traders rules or setups or style. I agree, at the very beginning uh, of your learning curve, I think it is the easiest way that you can learn a skill is copying, like is to copy others, especially uh the really good, the people who are really experienced and good at that profession. But gradually, you you need to figure out what works for you and what doesn't work. You really need to filter them out, like and gradually to form your own style that really works for you. There's some traders um really cannot afford a huge drawdown. So maybe like they they will be more suitable for like selling into strength and like to and compensate with a higher turnover rate. Like this possible scenario. And some maybe really uh, don't like buying the pullbacks, or like then you can like focus more on the breakouts that is working, and just avoid the pullbacks. Like because sometimes if you keep trading the pullbacks and the pullbacks are not working well for you, then it probably going to affect your breakout trade as well. Because you're getting losses in the pullbacks, then maybe you become more hesitant when trading the breakouts. They're also like setting tight stops. Like some people don't cannot they will they're really like having a strong feeling of getting stopped out. They cannot have a low afford a low win rate, adapt to a low win rate strategy. Then it is not much to to use a low win rate approach to be profitable. Then you can like widen your stop a bit to find uh the better entry with a wider stop. And maybe you gradually adapt to the other style too. Like for example, if you trade breakouts better, so you avoid the pullbacks and then keep trading the breakouts, and you have become profitable and at trading the breakouts. Then you then after you have become profitable, then you can start trading some pullbacks because you have gained like kind of more experience. Kind of you get you collect or you're getting some aha moments. Then maybe gradually you also like learn how to trade the pullbacks too. Can you advise how to grow a small account quick? Forget about your trading a small account. Do I use price alerts? Rarely, occasionally, not that often. Do you think only trading pullback is fine? Yes, definitely. The main thing is to trade hottest stock in the hottest. I agree. The buy points can be different. When I become profitable since since I start trading, um I actually I actually never have a red year. Like in I started in 2020, and 2020 is a easy dollar environment, and then I think I doubled my account, or like I tripled my account in 4 months. So I think on January 2021, I think I made maybe 100% or more in January to maybe early February. And then I started, that is the prolonged 50% drawdown. But still, I think I ended 2021 green, and 2022 I ended the year with single digit return. So probably at the turning point is Gafana trade back in early 2023, and also this one at the June or late May 2023. So I think after this May or June trade, and my equity curve um, reached an all-time high since the early 2021. So you can say, yeah, I think maybe took me 2.5 years to be really profitable. I don't know why I keep this screenshot, but I think this is the short reports or from this Carousel Capital back in March 2024. And since then, the stocks have never fell below this gap up. I think it's an EP gap up. Interesting. What would your what would be your advice to be a risk averse trader who struggle to put on a lot of risk to be concentrated on margin? Um, but you need to know what's the reason behind to um to struggle putting on a lot of risk. Like what does it mean to be a lot of risk? Is it 0.5% of your account you consider as a lot of risk? And or you think the dollar amount really matters? I believe um, treating your trades as a percentage, as percentages of your accounts are the best approach. Like forget about the dollar amounts. How to start getting on leverage? You maybe just don't put too much emphasis on leverage. Just don't put too much attention on it. Just the easiest way would be look at your look at each of your trades individually, like manage them individually. So for example, right now I'm like 200% long, probably more than 200%, but uh but I'm not like buying all positions at a time. So on Thursday I have several 3 or 4 trades working, and then on Friday I bought 2 to 3 more, and then on Monday I bought 2 more. So you gradually build up your profit cushions, and you control your like um drawdown by getting the tractions and the profit cushions gradually. I am I'm I would say 90% technical. The remaining 10% fundamental. I'm probably only look at the theme, like which sector, which industry does the stock belongs to. Although it is very important for the stock selection, but I think it only like 5 to 10% of the analysis. So I think this is a good ending to end the stream here, and I think I'm gonna to chill to chill out a little bit. Sometimes I figure out I would most of my I, I'm not saying most, like I would make many losing trades after I started getting traction, and then I would like oh to trade some, maybe chasing some stocks or buying when the indices are kind of extended. Generally, this is the period when I get a lower win rate after getting lots of positions working. Yeah, so Tesla is the main candidate for the coming days and weeks. So if you are already well positioned, and probably it's better to go do something else. It's really hard. It's really hard. Like I got shaky notes from a lot of the leaders in the first pullback, but very fortunately I bought some of them back. So it's really easier said than done. So thank you guys for coming, and see you in the next one.